My next guest, he's in a suit right now. By the way, one of the most respected market observers out there, and Bianco Research President Jim Bianco. Jim, let's start with the notion that the blue chip names are doing pretty well. America Inc. is providing an upbeat picture in the absence of economic data. I think that I actually prefer hearing from CEOs more often than the data we get.
Yeah, and I like to prefer that they're not AI companies that are actually telling us that they're actually going up. And there has been some numbers that have been coming out in the third quarter earnings reports that have been very optimistic, especially in the financials. Financials, the banks and stuff have been reporting very good numbers, speaking of old line companies.
Yeah, talk about this right here. You know, every day on the show, someone comes on and says, Charles, I don't like the market because we're trading at 23 times. But a year later, look how often this market is higher rather than lower. I mean, so how do you use these PE ratios? How should someone incorporate them in their day-to-day decision making?
It is a bit of a concern, but they're not timing tools. You're right that over the next year or two, the market could go up or down a lot. But they are expectation tools. If you're buying stocks at really high PEs and saying where they're going to be in 5 or 10 years, you better hope that earnings are just through the roof. Otherwise,
does anyone even buy stocks, though, to hold them 5 or 10 years anymore? I mean, really, in 60, I know the average holding time was like 7 years. Now it feels like 6 months if you're long term.
Yeah, I would agree with you there. But so that's where the PE ratios come in, is that over the next several years, if they don't meet expectations, they're going to struggle. But for the next couple of months or year or two, not really.
And we know, like, if the market were to start going down, everyone would start to point to this. Oh, that's why, you know. But again, it's not necessarily the reason per se, but it does add pressure if we do start to move a little bit lower. Although nothing's moving lower. Right? Yeah. You posted this chart. Now, essentially, the worst performing asset is up this month. So everything is up, and that's sort of bewildering to a lot of people.
Yeah, stocks, bonds, cash, commodities, gold, it's all going higher. And that is...
I should check the Beanie Babies and see if they're making a move.
Right. And I mean, your house is going up, too. Don't forget that. We've posted this chart with respect to what exactly is the Federal Reserve trying to fix by cutting interest rates? Because everything is going up, and the Fed works through what they call the financial channel to try and spur markets to spur the economy. Well, if everything's up, I'm still trying to figure out what they're trying to fix.
Well, help me with this then, because this is the SOFR. You know, the Secure Overnight Financing Rate, SOFR. Talk to our audience what it is and why this is starting to bubble up for some people as a potential concern.
So it is a concern. It is not a crisis or anything like that. And that is that the amount of liquidity in the banking system seems to have been drained a little bit too much, and we're starting to see higher short-term interest rates. That's always a concern that we could have issues if it isn't rectified. Now, the good news is everybody's talking about it, including the Federal Reserve, including Chairman Powell. So maybe they're going to resolve this situation. But until then, this is kind of one of the yellow flags that I have on my screen.
How would they resolve it?
By adding more liquidity, or at least stop doing quantitative tightening for starters, and then possibly...
Well, they've already suggested they're going to, but that would be next year maybe?
Well, yeah, they'll probably make an announcement at their meeting next week. They'll stop quantitative tightening, but it might not be until the end of the year, but they'll not announce that it's coming in next week.
And this is a chart that one of the many charts you put up that goes along with that. And let's talk about gold for a moment.
Yep.
There's a million charts out there. This just happens to be one. They're all sort of the same. This is sort of parabolic move. China has become also, all of a sudden, they have an insatiable appetite after not having any appetite for a long time. All the other big central banks were buying gold big time since Russia's invasion of Ukraine. But why now with China?
It might be political, in that they're taking their dollar assets and they're reserving them or moving their reserves into gold because of all of the negotiations they're having with Trump over the tariffs, and they want to protect themselves potentially from being either sanctioned or something with the dollar. But what it does show, this chart, is that a lot of the buying of gold is coming from Asia. It's not out here in the United States. We're just eating popcorn, enjoying the rise. It's the Asians that are buying gold in big numbers.
Although we got to give props to Americans who bought it at Costco a couple years ago.
Yeah.
They're doing pretty good.
Yeah.
All right, one last thing. Interpret this, because, you know, the 2-year now really breaking some serious resistance support points. I mean, how are we supposed to interpret that?
This is an expectation of where the Federal Reserve is going to go with interest rates. The 2 years very tied to the funds rate policy.
Does this add credence to 3 more rate cuts, or at least 75 basis points this year?
It does. It does that. It believes that there's going to be 3 more rate cuts. But the caveat I would give you is we're in a government shutdown. We haven't gotten any data. When that data comes out, if it's too strong, this could change.
But we do believe that the bond market is somehow the smartest market out there, maybe, in terms of, it's a lot smarter than the equity markets.
The bond market operates on getting the return of my capital as opposed to the return on capital. So it always is more fearful, which makes it to believe that it's smarter.
All right, Jim, always great seeing
Thank
you,
you.
particularly in person, my man.
Thank you. Good to see you.
See you soon.